Hi there, good morning. Welcome to the Trade Setup right here on BloombergQuint Live. I've just plugged in a microphone in order to ensure that the voice is okay. If it is not, I would request my producers to just tell me on the private chat that it is not, but otherwise let's just proceed with the trade setup as it stands today. So it's the first day of the week and some of the standard procedures will apply to my trade setup, including getting CK Narayan's chart for the trade setup. But first, what the world markets are up to. So the US markets in Friday's session, I think a lot of people pass messages that, oh, there was a big drawdown, etc. I think it was standard par for the course, just a day of consolidation, if you will, in the US markets. And frankly, when I looked at the US futures as well, they didn't suggest anything untoward dramatic. That's the point that I'm trying to use. Now, I'd like to bring everybody's attention to a few points that some global papers are talking about. Um, there's this story on Bloomberg.com and BloombergQuint.com, which shows a chart which from Citigroup. Let's try and get that story, if you will, and the chart within that story, which shows how compared to what the estimates are of the economic activity in the US, the current status of economic activity seems to be lagging those indicators. And therefore, this whole belief about the US economy heating up and the government or the Fed being on the fast forward drive in order to either tinker with the rates or otherwise might get pushed by a bit, which effectively is positive for the market viewers. That's what I'm drawing your attention to. Remember, bad news in effect of the last 18 months has been good news in that if there is fragility, then the money flow stays in. Now, purely from a trade perspective, that's actually not bad news. So keep that at the back of your mind. I mean, maybe towards the end of the trade setup, we'll try and get that story up. But that story has a wonderful chart of how it's a Citigroup chart of the city economic indicator and how the actual numbers vary a little bit from what those indicator average indicator numbers are. So that's the long and short of it. But yeah, so don't get too scared. I think most people are getting it wrong, and nobody's fault really, but most people are getting it wrong about the timing of what the taper and eventual rate hike could be. So let's not really break our heads too much over it. What about the Asian and the SGX Nifty? And then let's bring up those markets and show you what they are up to. So the Asian markets, well, actually a tick of green and a reasonably bright tick of green across most markets. The SGX Nifty will come up on your screen next. And again, I rarely believe that the SGX Nifty is a key indicator of what we will do during the course of the day, but it might be an interesting indicator of what we might do at the start of the day. And therefore, the SGX Nifty becomes interesting, about 0.25% or thereabouts. So maybe around 17,300, 17,400 is the area around which we may start. Now, what's the trade setup for the day looking like? For that, I'm referring to Dr. CK Narayan's weekly piece, which comes on our platform. And you might want to read it because he really gives some very good insights. And that's a man of experience, right? A man who's been trading the Indian markets now since 1992 or 93. So that's a man of experience speaking. And if you look at that story, and there's a chart in that story which shows how the last two runs that we've had, the weekly candles are higher than the previous weekly candles. So here's the chart, and I'll try and take a minute to explain what CK Narayan is trying to say via this story. What he's saying is that if you look at the previous two runs, one was April to June, the earlier cited one, and then the other one, which is marked 1837, which is 11.84%. So what he's saying is that in each of these periods, which is divided into weeks, the subsequent week of the index closed higher than the previous week's high. And he says, according to him in technical parlance, as long as that keeps on happening, there is no reason to worry. So he's saying what becomes very important is to monitor whether this week's close is higher than the previous week's high. And if that is indeed the case, then it's great news. So therefore, do watch out for that towards the end of the week. If that continues, then it's a trend sustaining piece and we take it week by week. That is his perspective, of course. Now, therefore, what is it that you look forward to when it comes to trade setup? So the key thing is, viewers, heavyweights like Reliance Industries, like ITC, like HDFC Bank, and some others are actually the key points in focus today, right? And this week, because they don't look overstretched when it comes to valuations. They don't look overstretched when it comes to how much run up that they have had. So that is something that all of us have to watch out for. Reliance, ITC, HDFC Bank, they don't look overstretched. And now let's stick with that. And as long as they are the ones which are stable, the Nifty might actually look stable. So let's wait and watch. A bunch of mid-cap sectors have only had the first up move in recent years. So I know people are getting nervous about mid-caps and small caps, but if you look at real estate, if you look at sugar, frankly, if you look at a bunch of auto ancillaries as well, for the first time in last 3 or 4 years, they are having their up move. So therefore, the valuations out there too are not really looking overstretched. You could argue specialty chemicals have done really well in recent years, but that's not the pocket I'm talking about right now. So that's the other piece. And from what local dealers tell me, I think you should all watch out for NBFC stocks this week. They could be very interesting ones to monitor. You should also watch out for metals, by the way, and steel in particular, because from whatever data I got last night and I saw, China steel futures have rallied a bit, and therefore steel could be interesting to monitor. Speaking of steel and speaking of NBFCs, those are stocks that I'm starting off the stocks to watch list with. So I'll watch out for JSPL. Yes, it was known, etc., but I think shareholders have formally approved the divestment of the entire shareholding of the company in its subsidiary Jindal Power. More than 90% of the minority shareholders voted in the favor of the deal. So that is the first one to monitor in the session today. Mahindra & Mahindra Financial Services, I think it's a big one. Disbursement, they say it's a stock that's been plagued by issues around the NPAs, but their numbers for August seem good. They're saying that disbursements were about 2150 crores, up 57% YOY. More importantly, collection efficiency was at about 97% versus 95% month on month. So month on month, there is an increase in collection efficiency, and 97% is not bad news at all for the business that Mahindra & Mahindra Financial is in, which is rural. They witnessed a meaningful reduction in the NPA contracts in August as customer cash flows improved, which is great. And we all know that rural has surprisingly done well despite a devastating second wave. So this is good news, and it corroborates. And they expect, Mahindra & Mahindra Financial Services expects the downward trajectory in NPAs to continue in September and the months to come. So pretty strong and buoyant commentary. I think this stock will react positively today. There is also a CLSA note, which we will come to later on in the course of the trade setup on M&M Financial, by the way. Some other stocks to monitor include an Engineers India. They've got an order of 1039 crores from Chennai Petroleum Corporation. That's a reasonably large order for Engineers India. So it's a stock that I will monitor in the session today. Do watch out for EIL. Do watch out for Ashoka Buildcon. They've gotten an order from the government of West Bengal. I think it's northwards of 1,000 crores, maybe 1,500 crores or thereabouts. So large one for Ashoka Buildcon. I'll watch out for that one as well. NMDC has cut iron ore prices by 1,000 rupees per ton. Do watch out for that stock. I wonder if there is a bit of a crack. This was largely anticipated, viewers, keep in mind, because global iron ore prices have been plunging. So it was a matter of time before NMDC had to do it. Let's wait and watch what happens. By the way, this is one more thing that actually helps some of the non-integrated steel producers, and therefore you might see some bit of rally there. Anybody who buys iron ore from NMDC and the likes might actually benefit. So this could be one more addition to why steel might look interesting today. Bajaj Healthcare, they've launched a COVID-19 drug for the treatment of moderate to severe COVID-19. Now, there are a bunch of things in the fray, but you never know what helps a stock. So I've just mentioned it here. Let's watch out for this one too. That aside, I will watch out for Kirloskar Industries. Anuj Sheth has bought 80,000 shares at 1407. Gagandeep Credit Capital bought about 76,000 shares at 1407. So Kirloskar Industries was up about 10-11%. And Anuj Sheth is associated with the Inam Group, and that's why this bulk deal is important. Remember, the stock had rallied a bit, 12% already in Friday's session, but maybe there could be more in store today. So let's wait and watch what happens here. Some trading tweaks. Themis Medicare moves out of the ASM framework. Lux Industries, Jamna Auto, Centrum Capital move out of ASM framework. Actually, Themis moves into, excuse me for that. And the others have moved out of the short-term or the full-time ASM framework, including Linda India, which is up about 5-6% in trade in Friday's session. So all of these names could be interesting ones. And like I said, M&M Financial could be interesting because CLS has raised the target price to 210 from 180 rupees. They've mentioned the same things that I spoke about, that the strong collection efficiency of 97%, which indicates a quick wave to recovery, some reduction in NPLs. More importantly, this line, the last line, that they calculate that Mahindra Finance has excess NPL provisions of 1,800 crores, some of which could reverse in the second half of FY22 and the rest in FY23, which could all aid to the bottom line performance, right? NPLs provided for, which reverse, which is a big thing, which is a great thing for any financial institution. So this is what CLSA's math suggests. I haven't done the math, to be honest, but yeah, which is one reason why I was tempted to say that NBFCs could have a good outing in the next few days. So I think I'll watch out for M&M Financial and the likes. So these are a few names. I'm told that stocks that in the brokerage space, the Edelweiss, Motilal Oswal's, Angel Brokings could also do well. So let's wait and watch if that happens or not. And viewers, I'll watch out for Reliance Industries, individually in particular, that whole wanting to buy out a global company, this whole clean energy, green hydrogen aspect, all of which helps in the ESG score as well. Lots of triggers, including the smartphone launch. So lots of things to watch out for when it comes to Reliance today and for the week. In the run-up to the AGM and the Jio smartphone launch, actually, I think Reliance remains a hot stock. So therefore, watch out for that. Last but not the least, what stood out for me, it's a very important development of sorts, I think. Lloyd's, one of the biggest names in global insurance and reinsurance industries, has said, and I'm using their piece out here, quoting them, that they've said that this is what the story said, the Bloomberg story said, they've bowed to pressure from environmental campaigners and set a market-wide policy to stop new insurance cover for coal, oil sands, and Arctic energy projects by January 2022, and to pull out of the business altogether by 2030. Imagine as early as 2022, Lloyd's will move out of insurance of some of these projects. It will be very, very interesting. They didn't comment on the Adani Carmichael coal mine and one more project, but otherwise, Lloyd's is right up there when it comes to insurance, and some of these fossil fuel-based sectors could be it could be tricky for some of these starting 2022. Let's wait and watch. Nevertheless, that's it from the trade setup this week or this Monday morning at least. Thanks so much for tuning in. Have a great week ahead.